Who's going to ring the bell?
The music will come.
Because in Lords they ring the bell, as you know.
Yes.
I mean,
Yeah,
Lord's
we
cricket.
play the video. Yeah.
A big champion of Indian women's cricket.
Oh, you?
Yeah.
Oh, okay.
I run the biggest Facebook page in the world for it.
Oh,
87,000 members. Came on TV last week. Yeah.
Hello, and welcome to another edition of the Business and Banking Dialogue Show, your daily one-stop show for the best of best in topics of financial world and subject matter experts. We are live, as you all know, across EPS channels, YouTube, Facebook, Twitter, and LinkedIn. Thank you for your participation in today's show. I'm KK, your host and moderator for today's show. Our topic for the next 1 hour is very interesting. Is surfing the offshore banking wave. Okay, it's surfing the offshore banking wave. So please join me in welcoming Mr. Prabhakar Kaza to the show. Good morning, sir. How are you? And welcome to the Business and Bank. I'm good, sir. Yeah. Thank you. Thanks for coming. And early morning, it's for you. How are things in the UK now?
Well, the temperature is coming down. We don't have much of sunshine as we should have.
Yeah, that's true. That's good. Okay, ladies and gentlemen, let me give you a brief about Mr. Kaza. Though we have had the fortune of having him earlier too. Mr. Kaza is the Chief Executive Officer, Board Member at the Nevis International Bank and Trust. You have the slide in front of you. You can read that too. He's elected as Town Councillor for Kenilworth South Ward. Elected for 4 years. He's been elected as a councillor for the next 4 years. He's also director at Kaza Business Consultants, which arranges bank loans for UK registered companies, as well as assist pro bono local small and medium enterprises. Formerly, he was relationship director at HSBC UK and CEO GM at SBI UK. Mr. Kaza is, as you all know, is located in UK. What I just came to know about Mr. Kaza, ladies and gentlemen, he's an ardent fan of the India women's cricket team. He runs a page in the Facebook. He runs a site for them, and he's got some almost about 87,000 viewership, which is fantastic. Sitting in UK, he is campaigning for the Indian cricket team. Excellent, sir. Thank you for coming. Thank you for coming to our show, sir.
Thank you.
In the offshore bank, ladies and gentlemen, between you and me, in common parlance, would be like a bank location is not in the country where the depositor or customer is residing. It's like, say that you have a deposit in, let's say, in the local bank in wherever you stay. Instead, you have the account somewhere, maybe in UK, Georgia, Guyana, Cayman Islands, Panama Islands. Your account is there, not here. Okay, is that possible? And if it's possible, how is it so different from the current, from the local accounts that we have? let's understand, Kaza, what's all this about. So, Mr. Kaza, what exactly is the difference between offshore and onshore banking?
Yeah, good morning, everybody. The main difference between offshore and onshore banking is that in offshore banking, you're not resident in that place. Whereas onshore banking, you're resident in that country. If you're an Indian having an account, say in UK, then it's an offshore account for you. That's as simple a definition as we can get to.
Yeah. So you don't have to be present there. You don't need to have a office there or a home address there. Nothing of that sort. But yet you have nobody there actually. But yet you can have an account in that country. And that's what is offshore banking. So there is a strong perception that offshore banking is used by the rich and famous to perhaps funnel their wealth into secretive banks, such thing, which is, it's like got a little badly to avoid paying tax. Is that true? And what is your views on that?
Offshore banking has got different definitions, different ways of looking at it. There are some people who think that the whole thing is illegitimate. There are some people who think that's the best way to bank. Now, in the case of offshore banking, when you have an account elsewhere, if I were to be in Hyderabad and have an account, say in Germany, people would say, why do you want an account in Germany when you can as well have it in Hyderabad? The only reason that they can think of is that I'm trying to hide something. And when do you want to hide something? When you have made money illegally, or you do not want the government to know either the source of funds or the use of the proceeds. So the general thinking that any offshore account is illegitimate and is used for illegal purposes is not far from truth. I asked about half a dozen people, just casually ringing them up and saying that, look, I'm speaking on this subject. What do you think? The first reaction was, anybody who has an offshore account is a crook. That is not really. I mean, that's the perception. We can't do. We can't do with it and say, look, I don't care and all that.
Yeah.
But the reality is that offshore banking has been there for now maybe about 100 years in a good, strong, sturdy way, and it has come to stay. By the definition of offshore accounts, even if you have an account in France or Germany, Luxembourg, Singapore, Mauritius, they're all offshore accounts. But in the general perception of people, when you say offshore account, it's invariably an island. It could be Jersey, Guernsey, the Caribbean islands, even Panama for that matter, even if it's pure territory and no waves or no island as such. The main reason being that people would like to go for these offshore accounts. One, of course, is that it's too far away for your regulators, for your income tax inspectors to get into it in the good old days when you didn't have internet, and probably either a person had to go physically or write a letter.
Yeah.
The famous one being that of Mr. VP Singh and the St. Kitts affair, as most Indians are familiar with. And when I was told that, look, do you want to become a board member of Nevis International Bank, which is a part of St. Kitts and Nevis, my first reaction was, oh my God, what are these people asking me? I'm such an honest, compliant SBI banker, and to end up in Nevis. Then when you dig deep into it, you find that the whole thing was fake and it was all trumped up. Now, coming down to opening of accounts, it's equally difficult to open an account offshore nowadays as it is onshore. People might think it's the simplest of things that you can just walk into, open an account. No, sir. Most Caribbean islands don't like you to walk into their bank branch. They would like to correspond only nowadays, of course, on the internet, and earlier by mail. They go only by your photocopies of your proof of residence and your passport, just like in India. And the money that you send is again only from bank to bank in most cases. Some of them, like us, we don't issue checkbooks, no cash, to keep ourselves as far as possible away from all this. Having said that, even the United States has got offshore accounts. You have Delaware, offshore in the sense having the same level of secrecy and being a tax haven. You have Delaware, you have Wyoming, you have Nevada, You have enough of them in Liechtenstein, Luxembourg, and majority of the British overseas territories and crown dependencies have only offshore accounts. Now, coming to why have the islands become so popular in terms of offshore, when communications in the good old days must have been very difficult. The main reason why this became popular in the islands is the fact that they do not have anything else to do, no other source of income. They have little or no manufacturing, and whatever plantations that they had before, when there were slaves and bonded labor, now they're not able in a position to have the cheap source of labor. And the only way that they can do apart from tourism is either by citizenship, by investment, or by forming companies. Thanks to Panama Papers and Paradise Papers, I think practically everybody who reads newspapers, Financial Times, and or even Economic Times is very conversant with how these companies are opened. And so naturally the banks came subsequently. You have the banks in all these places. And Cayman Islands, for example, has practically half of the funds that you have in terms of wealth management from one particular island. So one thing, good or bad, they have come to stay. There were days when even a accountant of Lucky Luciano of the times of during the course of the prohibition in US ran his own bank in Switzerland for the mobsters. So it is not as if everything is bad. It's not as if everything is good. It will help you get more income if you put money abroad. It's only now in the 21st century that we have people in India who can manage your wealth in such a way that you get a very high rate of return on investment. But in the good old days, you had to go to places like Switzerland or maybe somewhere in the United States or in the Caribbean islands. India, of course, is progressing very much, and it is not beyond I wouldn't say ordinary man, but the person who say an IT specialist to have an offshore account and try to maximize his wealth. I think that's a very long answer for a simple question.
No, so that's a great. I mean, you gave a good perspective. So let's take an example. Let's take that I want to open an account, or any of our participant wants to open an account and say in a nice country, let's say Luxembourg. Okay, and do I have to go to Luxembourg to open the account? Can I do it online?
Yeah, you can do it online. In the sense, you can send your data online, your documents online. Most of the banks now ask that your documents be notarized. That you go to a public notary, show your originals, and get them notarized.
Yeah,
you need not go there online. If it's a company, they would ask you for your board of directors and ultimate beneficial owners, whether it's held by another company, another trust, and who are the beneficial UBOs, ultimate beneficial owners for this. And all this goes only by documentation. They would, of course, ask for your financials. They would like to see whether your company is in good standing. So the normal things that you have when you open an account in India, the same procedure is followed. And fortunately or otherwise, more so if it is run by an Afro-Caribbean island, because the EU and the US, at least the Afro-Caribbeans feel that they are being targeted, that the dollar is being used as a weapon, as they call it, it's weaponizing the dollar.
Okay.
So there are more and more restrictions being placed on these Caribbean islands, Panama and others, to ensure that they're very, very compliant. You have OFAC sanctions, you have EU directives, cooperative countries, countries being classified into blacklist, gray list, white list. And once you are a blacklisted country, it becomes very, very difficult for you to have correspondent banking. That means you can't transfer money from A to C without a B in between. So you can't transfer money at all from one place to another place. So it becomes very difficult to have a full set of banking being offered to a customer, thereby decreasing your total deposits, your total assets as such. So you got to take into consideration both the aspects when you come to this. It's the only good thing, you need not move from your chair to open a bank account. You need not go to a bank. You'll be very, very surprised to know that if you want to open a bank account in UK, if you're an Indian, more likely than not, it won't be opened. I had the difficulty even opening an account for Americans because they would say that, look, we have got to submit returns under FATCA, on the foreign assets compliance. So going into these things, even in UK, it takes about 15 days to open an ordinary account for an individual, and probably about a month to open an account of a foreign company. I mean, there are so many your Indian friends who are in US who want to do some job in UK, and the UK banks, say Barclays or any other bank or HSBC, would ask them to form the UK registered company so that it'll be easier for them to keep track of what's happening and who's the owner and who's the shareholder, who's the director. For these companies to open an account because they are Americans or their parent company is an American company, takes any amount of time, any amount of documentation to open an account. So to open a foreign account, simple in one way, difficult in the other. Depends upon, of course, like life in most places, how much money you've got. If you have a large amount of money, maybe any bank would welcome you anywhere. When you say, look, I'm going to keep only 50,000, they would ask as many questions about why you want the account. And most Indians now would like to open an account because they're going into the higher brackets. We probably don't have as many billionaires as China has got, but we don't need only billionaires to open accounts, offshore accounts. If there are more than 1 million accounts in these Caribbean islands, it's because people all over the world would like to open an account in these islands and also have also diversify their the positions where they have their accounts. It could also be because of instability politically or democratically, economically in their own countries, that they would like to diversify their portfolios geographically. Of course, the very thought that everybody would think is that people are only trying to avoid tax. Two things that we must always clarify, and probably everybody who's listening knows, between tax evasion and tax avoidance. As long as you are doing things according to in the framework of law, according to the provisions made, it's only tax avoidance. We are trying to avoid tax. Yes, Google does, Starbucks does, or great names that you can take off, whether it's Apple or Microsoft. All the major companies in the world try to do it. Establish yourself, open accounts, bank accounts in places where your tax incidence is low. It's not tax evasion. You're not trying to evade tax as such from the government or from the income tax authorities. You're trying to avoid within the framework of law. So things being what they are, I doubt if at any point of time you would see the demise of the offshore accounts. Even though the Americans, the EU, are targeting these offshore accounts. So is India for that matter. Now, if you're an Indian, you have to declare your offshore accounts. So, whereas probably about 30 years back, no income tax authority ever thought of incorporating a provision in the huge income tax act that we've got in any case. So, in this way, when things are getting tightened up, the very fact is that in times like this, like COVID, for example, now, people like to keep their money away from their own country. You never know in the country in which you are living where the things go bad in terms of foreign exchange, and the country would say, the authorities would say that you cannot transfer funds. We never thought that a few months back that Sri Lanka, for example, would raise restrictions on capital outflow. And so many other countries have come. Nigeria, for example, all of a sudden changed the rules of the game and made people bankrupt in the 80s. For the the same thing can happen in COVID. So more the reason why we find that more and more people want to open accounts offshore, so that their money is safe.
Okay. So you touched upon COVID-19 or the pandemic, and so yeah, COVID-19 has caused a lot of disruptions, a lot of hardship, and investors are pulling assets out of domestic market, perhaps investing in offshore. They feel those countries are perhaps safe than where you are. As per Forbes, UBS Bank made profits were up by 40% 3 months of 2020. So that means they have seen people wanting to keep money in the Swiss bank. It was about 12 billion in net new money, nearly triple the amount back in the previous quarter. So that's the kind of impact COVID has had. So my question to you, sir, does this mean private banking facility of an offshore bank is an attractive option for judicious wealth management?
Yeah, like we said in the beginning itself, right in India, you get, of course, interest on rupees. The interest even for NRIs like us, yes. Not in the sense living outside, but with a foreign passport. The FCNR gives a very low rate of interest. If I keep my money in any of these offshore islands, you get a much higher rate of interest. One would like to keep the money there. There's nothing wrong in it. Even the British government does not say you should not. But the fact is that the money is lost to the particular country where you live. But all the same, if you want to increase your the strength of your assets, you have to keep your money in the place which gives you the maximum rate of return. Whether you are having 50,000, 100,000, 1 million, 10 million, whatever be your portfolio, that is what every person wants to do, what every person tries to do within his own risk-reward capacity. I mean, nobody goes into investing all his money in Kazakhstan or in Liberia, where the political instability there, where the democratic institutions are not that strong, where banks themselves are not that strong. You might find that the bank in which you invested, say 100,000, which is probably not even secured, the bank was gone bust. So what people, it's a right of every individual, whether he's in India or in UK or anywhere else on the globe, to maximize his wealth. Going by that philosophy, if you've got the risk-taking capacity, you should open accounts offshore if you're getting something in return. And like you said, the money is fully tax paid. And the Indian government has got the liberalized remittance scheme of 250K, under which you can invest money anywhere in the world. It's not, luckily they've not stipulated a few countries and say invest only in these countries. Of course, barring sanctioned countries, which is a different story altogether. So looking from that particular angle, a person should be in a position to diversify his portfolio and invest in places where he can. But at the same time, please look at the restrictions that those countries have got. Look at the interest rates that they give. Look at whether they have got tax reduction at the source. Look at whether the country is politically stable or not. And in case you are not able to do, hand it over to some legal firm or an accountancy firm. In fact, one would notice that majority of the accounts that are being referred come through only chartered accountants and legal firms, because they have the wherewithal to verify what is the strength of that country and how safe it is to keep the money. Because getting more interest rate is one thing, the safety of that country is also another thing. Like I gave the example of Nigeria. If you kept all your money in Nigeria and you find that an army takes over and says that from tomorrow there'll be no outflow and it'll be only smoothened out over a period of time, then you're stuck. So you've got to take into consideration a large number of these things, and whether you require this money or not, whether you want to withdraw the money. Some banks don't offer debit cards. Some banks don't offer credit cards. You can't get any cash out of any ATM anywhere in the world. Some banks don't even offer checks. And another problem that you have in most of these countries is that they don't have dollar clearing. Things that when you're in an advanced country like UK or or even in Germany, we should take it for granted that there's always a dollar clearing and things will move very fast. It doesn't happen that way in, say, in the islands which are not dealing in dollars, because for them, dollar is a second currency which is accepted, all right, but there's no clearing as such between banks. And some of these banks don't lend. They lend only against your own assets, because the government gives them a license prohibiting them from lending any funds. And like I said, I mean, there are articles, of course, saying that the EU and the US are really racist on all these matters, and they want to weaponize the dollar and bring these Afro-Caribbean countries down. The fact is that even one small mistake could cost you the whole bank. So people there are far more careful than they would be elsewhere. And like you quoted the example of UBS. UBS, the American government wanted to shut down UBS operations in US. But they found that 6 out of the 8 clearing houses there are being handled by them. So they said, okay, they came down to having only fines. We're talking about billions when you talk about fines. You're not talking about 100,000 or 10,000 pounds. Yeah. And UBS had to give about I think 11,000 accounts, details of those accounts to US, and give an undertaking that they'll be compliant in future. And the same thing that I read today about Credit Suisse, that Belgium is investigating the accounts that are being held there. And in some cases, you might run into very strange problems, like one of those bigger banks in Geneva, where the entire database was given to different countries, US or France, UK, and even India for that matter, the so-called Hervé Falciani list. So there are problems in this particular fashion, but of course there are problems even in others. It's not as if there is no leakage of accounts that you have in India or anywhere else for that matter. This hacking leakages are there all over the place. But by and large, if the person wants to hide money, there are plenty of ways. Like, for example, you have the estimate that is given by most of the organizations which deal with this trafficking is that about $1.5 trillion is being money laundered every year. I mean, this money has to go around different banks, and the money goes on, and ultimately the funds have to reach a bank as such, whether it is trafficked or whether it is own, whether you got it by proceeds from a steel factory in Raipur, you still have to get the money back into your bank. So these people do somehow or other get all the 5 pounds, 10 pounds, $5, $10 notes into the banks, and the money goes around the world. And I attend, of course, this seminars conducted by LexisNexis, Kroll, and others, Refinitiv. You find that 70% of the money laundered is in trade finance. So you can imagine however careful the banks are, however big how huge your compliance departments are, money gets still laundered all over the world. And that's why the banks which are here in offshore, in particular, in the islands, actually in the Caribbean islands, or islands for that matter anywhere, Jersey, Guernsey, also Channel Islands, they get a bad name. But once, I mean, the reputation is where it is, things will stay as they are. And so in this introduction with quotation of our Joseph Stiglitz, who's a famous Nobel laureate in economics, who said that if all the countries, especially the OECD countries, take it into their head to stop offshore banking, they can. It's just that the political will is not there. And the people who are going to be affected by cutting short these offshore banks are probably the people in power. They're not going to hurt their own.
Yes.
I mean, I won't say Amdani,
so, Mr.
but
Kaza,
their own financial strength. Yeah. Sorry if I'm being very candid.
So let's. No, absolutely, absolutely not a problem at all, sir. So we talked about avoidance and evasion. Okay, evasion is bad. Avoidance, if it's possible, within the legal frame of things, nothing wrong about it. So, just a few practical reasons why should someone want to build his or her investment portfolio with a bank offshore account.
Like I said, most of these offshore banks have heavy expertise in wealth management. That's how, like I said, more than half the wealth management companies are established in Cayman Islands. And I'm told that they handle 1/4 of the personal wealth is actually there when the running into a couple of trillions of dollars. The main reason why it is there is that you have experts in the area or connected to the Cayman Islands. They may not live there actually. Like thanks to COVID, one thing has come very clear to everybody is that everybody can have a home office, and there is no need to go all the way to church gate to sit in the office. You can do the work probably here, and your person in the next cabin can be in Delaware or in San Francisco. So that being so, basically it's a question of connections. Why is it that some countries would have noticed over a period of time have sustained their financial strength? Say like London, New York, or even Singapore, even Tokyo, is because you have that manpower, the human capital of experts who are specialists in the particular line. Now, in the same manner with this wealth management, all of us would have invested something or other in our lives. One house, a little bit of money in some bank, State Bank of India for that matter. And then you find that it doesn't grow, then you say it's okay, let it be like that. But there are people who want to maximize their wealth as they go along. So for that, you have to give this to an expert. There is only so much that you can do while doing your own work and with your own level of knowledge, understanding, reading of the economy of a particular company as such. Because no person who invests in the stock market does it all himself, because he doesn't know what's happening in each and every company. It's the same thing with your wealth. Little bit, even if it's, like I said, starting from $100,000 onwards, which is probably about the minimum that you need to open an account anywhere, to any amount. It stands to good reason that you give your funds to somebody else to invest or to tell you where they should be invested. So that particular point we cannot escape. They do charge you a little bit for it, of course, they have to. But that's how life goes. You can't do everything yourself.
So one reason why you are saying that you may want to consider keeping your money offshore is to earn a higher rate of interest. Because if you want to keep it here, you may not get that kind of. So is there any other you want to keep it other than avoiding it, I guess?
No, we started the
any
question.
Any other reason why you want to?
No, we started the question with that the money is judicially earned, that you have paid your taxes for it.
Yes.
If you have not paid your taxes for it, you've got 110 reasons why you should keep your money abroad. Since for people who have that kind of money, they have enough number of people who can advise them. They don't require a Zoom webinar for this. And having said that,
okay, great.
Having said that, majority of the money that is invested abroad is, of course, money earned illegally. There's no doubt about that. Goes around the world, goes to different formats. Like I said, on the internet, in trade finance, everything is legitimized. Notwithstanding the fact that SWIFT has got its own money laundering software. Most banks do, when they onboard a customer, have him enough due diligence on him, get him through a LexisNexis or a Kroll or any big company that you might have anywhere else in the world, and then onboard the customer. They have software enough to find out whether there is any pattern in your flows of money, outflows of money, whether you're sending money only to the same person. There are enough types of like, for example, somebody might get 10,000 today and withdraws 10,000 tomorrow, then you'll get a phone call from the compliance department of that bank saying that even if the money is small, why have you debited and credited the same day? So that being the level of compliance, and most banks now spend more than 10 to 15% of their wage bill on compliance. Every bank has got a chief compliance officer. I mean, I'm sure it's something that most of us didn't know that such a thing existed when we joined the banking industry. Banks are, there are hundreds of people who are selling this compliance software. The AML software, Swift didn't have an AML software when it started. Governments didn't have sanctions. And if you give yourself an alert to any of these sanctioned persons or the non-cooperative countries, you would find that practically every day you will get an alert, and which you as an individual cannot do. You require a small department for it, even in a small bank.
Correct. Right, sir. So, ladies and gentlemen, this is getting very interesting. How do you, what should we keep a offshore account legally, of course, and how does it work? So, the Q&A box is open. You can put in your question, or you want to ask a question directly, you can also do that. So my first question coming to you, sir, is that it's come from a viewer, from a participant, is not named himself. So, when you say that these are these very small islands, right? Cayman Island and Luxembourg and other places, they have no industries. They have no, no other. So in a country where, you have the money, you invest in various things, you give loans and you earn out of that and you pay the interest to the customer. Where do these people invest the kind of money?
It was a good question. I was hoping not to touch it, because whenever you read Indian history, you read a very famous statement called silent transfer of wealth. When when we sold spice to the East India Company, in the beginning they gave us gold. Later they looted the gold themselves. Now, when you invest money in these islands which don't have any other source of income, as you know, they form companies and charge you $100 per year for keeping a company. You have 200,000 companies in Cayman Islands, 70,000 companies in St. Kitts and Nevis. That itself, in most cases, is a substantial portion of their income. Some of them, of course, open banks where there are international banks in the same country. Now, this money has to be invested somewhere. And as a bank, you have to invest it.
Yes.
You cannot invest it in the same country because that country has nothing to give you back. You have to invest it in a country which gives you a good return, but the risk is there, but it's not minimal, but the risk reward is agreeable. Now, what is happening because of this is countries like UK, countries like say Bangladesh, or even smaller countries, emerging markets, developing countries, invest money in these offshore accounts, in these wealth managers, and these funds are invested again back in the developed countries. You might find, for example, a bridge in San Francisco tomorrow is built by wealth managers, funds given by wealth managers from Switzerland. And where did the money come from? From developing countries. Of course, I'm not saying that all the money that we have, all the money that is there in Switzerland belongs to India. No chance. There are other countries which are far richer than India, which keep money there. But the fact is that whatever little money that we have is going off to richer countries because of funds invested abroad.
Excellent. So that's one good reason why you should keep. So let me take the next question. I would call Mr. Krishna Tripathi, ETV Global, to ask the question directly. Unmute yourself and ask the question, sir.
Good morning, sir.
Good morning.
Sir, just wanted to know, earlier Mauritius used to be the biggest source of this round tripping. Money goes out of India and then used to come back for investment into Indian market. Then Singapore emerged. During the COVID, what are the changes that you people have noticed over there? And if you can shed some light how this entire thing, the under-invoicing, how the money goes out of India and how it comes back. If you can shed some light for our audience, sir.
Yeah, thanks. I was hoping not to utter the word Mauritius, because I know that even if there are 10 people who are listening to me, 9 of them will be better experts than I am on Mauritius. Now, when we were in India, we thought India was actually, Mauritius was a country that was created by India. Then later on we find that it is a part of Africa, and that there are and then we found out, thanks to a recent renegotiation, that there is a bilateral treaty between India and Mauritius, that you have opportunity for avoiding tax capital gains on these shares, and even issue of dividends. There are a large number of international banks in Mauritius, and more than 50 countries have bilateral agreements with Mauritius. And it's a very simple way that you give more money to Mauritius, money comes back from Mauritius. And on record, Mauritius invests 1/3 of our foreign direct investment. It's pure round tripping. It doesn't benefit anybody. It may except benefiting those wealth managers in Mauritius, or if it is invested by, say, an international bank, the international bank makes money on these issues. Is it good or bad? One way it is good, because it's always good to have, a certain amount of crime. Like if anybody who's in the police would know, a certain element of crime is always good because it gives you an outlet for your evil nature, for the nature that you have been told not to do. You want to do it. So Mauritius has been very good for us in that way. People do invest in Mauritius, and because of COVID, people want to invest more and more because we don't know what will happen to this country into the future. And right now, there are very few opportunities for investment in any country, whether it's UK, US, or India, or anywhere else for that matter. One would not like to invest in a new entity, or if a company comes and says, look, we're going to go for an IPO of 10,000 crores, very few people would like to put their hand into it. So people are now investing in a foreign country, in an offshore bank, mainly because you don't know what's going to happen, but he guarantees you a certain amount of return. There are countries which offer you 6%, 8% return even now, because they're not able to get money from anywhere, from any other source. So with that level of funding, they're able to carry on with their structures that they wanted to form before COVID started. Because any country starts a long-term project, hoping that their budget will remain the same. If, like in UK, we started, say, a long rail between Birmingham and London, and then you suddenly find that your budget is coming down, capital budget is coming down. You have to get money from somewhere else, borrow money, even at a high cost, but keep the construction going so that the money that you invested does not go waste. It's the same thing whether it is Mauritius or whether it is Panama or Cayman Islands.
Sir, can you shed some light that how this entire round tripping takes place? How people take out money through under invoicing or over invoicing? Can you shed some light on this thing, sir?
I mean, I'm sure. One of the things that Mr. KK warned me when I came here, and he said, "Look, stick to the topic. Don't go too far away and all that." But KK, since I'm being asked, I have to answer the question. Over invoicing, under invoicing, very simple. Something that costs $100, you invoice for $80 and take $20 in US. And the same thing, something that costs 100, over invoice by $120, $20 more, and the money comes back. And nobody there is going to question whether it is very expensive, because there are only in some cases they do find out whether something has been over invoiced or under invoiced. But if it is a specific contribution, say for example, if it's a bunch of container load of saris, there's just no way that you can find out whether what is the standard cost. If it is or if there is a internet costing available. Like when I got a good camera for 3,000 pounds and when I came to India, the fellow wanted to tax me, and the fellow went on to internet and found out that how much it costs. So you don't have any standard costing like this. And even at the ports where I've been in UK, Dover for that matter, only 1% of the containers are checked. It's very difficult to check all the containers. So even when they are checked, you can check one item or two items in that. The government does not have so many people to find out who's doing wrong, what level of right or wrong, and how much he should be taxed. Then if that were to be so, the government will be employing all the people only in customs, income tax, and the rest, VAT and GST and all that. There won't be many others left to do any other work, and the government can't afford it, and will be probably ending up paying very high level of GST or very high level of taxes for this. So the choice for most countries, even now, I mean, you'll be surprised even now. 100% of checking should be done for anything that comes from India to UK, because we are getting out of Brexit. Even tomorrow it should be checked 100%. Any container that comes, in the shipload of containers, hardly 4% are checked nominally. Otherwise, there'll be such a pile of containers and such a delay that it make no sense to have any international shipping. And over invoicing, under invoicing, you would have read about enough of them in terms of frauds that have been committed. Whether it's like you take diamonds, for example, who goes and checks diamonds? I mean, when I'm sure people in State Bank or anywhere else would tell you about the branches which deal in diamonds. There's no way that you can check how many diamonds or how much is diamond worth. You just have to trust the customer and go with it. I hope I've answered your question.
Any change in
we can have a session one of these days for over invoicing and invoicing, considering that I've been in trade for a long time.
Sir, any change in their tactic during COVID, sir?
Yes.
During COVID, we still have this international shipping being carried on. Like all of us are getting what we want to eat, what we want to dress up, whatever you want to eat, whatever you want to do. The only thing that's going on during COVID is there is more and more under invoicing. There are two reasons for it. There were two explanations that I got from somebody the other day. The explanation was, one, the prices have to come down because of COVID. Two, could be that some companies which are not reducing, they want to keep their money outside instead of bringing it to their own country. Yes, sir. Sorry, I cut you off.
Okay. No, sir. Thank you. Thank you, Mr. Tripathi. Good questions. I hope you got the answer. There were, I think, hidden answers to what Mr. Kaza has given. So you have to read between the lines. So I have a query coming from Rajita Justin. Sir, Prabhakar Kaza mentioned, Mr. Prabhakar Kaza mentioned Lexis, Nexus, and Kroll as companies providing software for audit trails. It will be interesting to know how the role of technology will help in reducing AML.
Well, somebody who knows the subject, obviously. I'm always scared to answer such questions. Okay. A person, say, for example, applies to us. We are in St. Kitts and Nevis. Somebody applies to us from Belgium. In the good old days, I believe, if somebody wanted to open an account in the bank, somebody would come and verify whether you're actually staying there. Later on, they started sending registered post. And now we search on the internet, Google on the internet. But at the same time, we do not know whether you have done something wrong, something criminal, whether you have any jail record. Whereas these companies are in a position to find out these things from their databases, and whether you can probably to some extent find out whether it's a sanctioned person or not by EU and OFAC. But companies like Kroll and LexisNexis are gold standard in these matters. Once you get the clearance from them, that is the person acceptable to you, by searching their databases, and their databases are global in nature, not necessarily confined to one particular country. So depending upon the amount of money that you're willing to pay, they'll extend their coverage of search and investigation. And well, they would not be able to probably tell you how many speeding tickets you got, but they would definitely be able to tell you if you've been to a jail, whether you've been criminally convicted, and whether there is any case of tax evasion, whether there is any issue of enforcement against you, and whether you got into truck with the authorities anywhere. Because all these records, all the governments make it a point to give it to some companies, so that the person who is uploaded into a bank, onboarded into a bank, is clean and neat at the time of joining. Having said that, we most of the banks now don't just stop at when the person enters the bank, but do it on an annual basis. So at the time of your annual report, most banks do go back to these people and LexisNexis and Kroll, and also ask them whether these people are still good to go for as far as the banks are concerned. That's how people like Mehul Choksi got caught, who was in I think he hasn't come back yet to India. So I mean, people are there in Anguilla, any of these companies, or even Jatin Mehta, who was in St. Kitts, I'm sure, or people read all this, and who have now run away to somewhere in one of the European states, East European states. So these companies do run search on the databases of these investigative agencies or agencies which ensure compliance with the banks, how good they are on their balance sheet date. If something happens in between, of course, it should come in the newspaper, because no bank will spend so much money to search about the creditworthiness of a customer on a daily basis. On an ongoing basis, they do.
Yeah.
Even this citizenship by investment that these offshore banks offer, they do the same thing. Good question, Rajita.
Okay. So, yeah. So thanks, Rajita, for a good question there. So let's be in line with the digitization as the question was. So offshore banks have been forerunners in the adoption of digital banking. I mean, I always see that they are very aggressive in adopting technology. Can you tell us about what is the next wave of digitization in offshore banks?
Offshore banks have, they do offer the same facilities that onshore banks offer. But as you would appreciate, some of the customers do not want these options. Like some of our own customers don't want online platform. They refuse to take debit cards. Checkbooks, most of them don't want to have at all. Cash, very few of them take or deposit. When it comes to mobile banking as such, most of them refuse to have this voice or any biometrics as such. They still follow only the passwords, if at all they want to have online banking. But most of them, like they say in some movie, you should be so rich that you don't know how rich you are. That was a status in the good old days when people, only the rich people wanted to have offshore banking. Now, you'd be surprised to know a large number of our IT people in the UK have accounts in Jersey and Guernsey in the Channel Islands. Makes their life easy. They become employees of that particular. They can, of course, do it in UK also, but they don't want them to open an account open a company in UK. They open a company in Jersey, Guernsey, and ensure that they become employees of that particular company. So the main reason being that they can spend as much money whatever they get from by way of their work. They are not employees of the organization where they're employed, but they are employees of their own company. To tell you also about why people have offshore accounts, the famous, I don't know the name of the bank, but a chairman of the bank who went into the Treasury Select Committee of the Parliament and was asked, why is it that your bonus is credited to an account in Switzerland? And he opened an account. He was the one-man company, shareholder, director, himself, everything, and he's the sole beneficiary. And the money was, and he was the chairman of the bank. So he said that I was doing very well all my life. So, but I didn't want my colleagues to know how much bonus I was getting. That's how I opened his account 20 years back. And even as bank chairman, my bonus is still credited to this particular account only. So there could be several reasons why people open offshore accounts. We all think that people open them only to secrete them away to some place where nobody knows where the money is hidden. Or unfortunately, of course, most of these companies that are formed are also shareholders, Benami directors companies which offer directors as such. So because of the secrecy that is evolved all around, and you can have multiple accounts, multiple companies, multiple accounts in them. You can have yourself company, a trust on it. You'd be surprised to know that one of the diamond merchants that we had as an account holder, it has, for me, of course, an offshore company because he was in Belgium, with our bank here in UK, and he wanted to buy off his uncle. We're talking about diamonds, our own Bombay, Chennai Road. They got a shop there.
Yeah.
And he wanted to buy off his uncle. Now the amount is 20 million. So naturally, all these people would like to show that they borrowed the money. He came to us, he borrowed the money, and we gave it off because he already had that much of money in his wealth management, and bank was comfortable in giving him 20 million, not a big issue, because he already is giving the deposit. And after that, the current account continued. Then came our due diligence, enhanced due diligence on the customers. And lo and behold, we found that he had about 51 companies, and ultimately all crisscrossed. Where 20% is a shareholder of one, 30% somebody else, 40%, all crisscrossed, and he's ultimate shareholder at the top. And the number of companies amounted to 51. And in enhanced due diligence, we are supposed to find out who are the shareholders, who are the directors, what are their financials, are they in good standing. And the gentleman himself came and said, Mr. Kaza, you've been very helpful to me. But now I think giving that much, I would employ a person for 1 year in my company, and which will serve no purpose for either you or me. And in any case, the loan is cleared, I will close the current account also. So if you do this kind of enhanced due diligence on customers, you'll probably be able to not get many customers such as on board. So to that extent, it's good that banks do this. Like in one of the AML conferences that I attended, one of the things I said was, look, I'm also a counselor. I'm not here as a counselor, but in there, just quoting that as a counselor, I want more and more investment in our area. Any politician would like to have a big hotel coming up or a big recreation center, some community hall coming up in his area, and he goes and inaugurates and gets photographs all over and takes credit that, look, during my time, this has come. But as a banker with zero tolerance and 100% compliance, I would like to know where the money has come from. And that seems to be the biggest problem that most of the countries have, right? Most all the countries have. It is not as if America doesn't know this issue. It knows. India, yes. So does Singapore, so does Hong Kong, so does Switzerland. But notwithstanding the examples that we gave of UBS, Credit Suisse, and the falsy analyst, and so many of the international banks located there, this problem is going to continue forever. This conflict and how much to manage, how to manage appearances.
Yeah.
So
yeah. So one question has come: which are the best countries for offshore banking, and why do you say so? Maybe one or two you can give. We don't have, we're running out of time
now. Well, if you there was a chap called Nomad Capital who keeps running these YouTubes. I don't know. He seems to have bought up YouTube actually. If you ask me, if you type offshore banking, you'll get to Nomad Capital only. The thing that comes Nomad Capital. I don't know where he's got that. I don't even know him. But he says that Cayman Islands is the best. Maybe because the wide array of options is available to anybody who wants to invest funds abroad. Of course, you still have Hong Kong, you have Switzerland. This could be 3 good examples of where you can invest your money. But like I said, the due diligence in most of the countries now has gone up severely. So don't expect to just send, like we used to do in the good old days, a hazy, fizzy copy of your passport and some old proof of residence and expect an account to be opened immediately. That doesn't happen. Banks have got very strict due diligence now. And like our premier, Mark Brantley from Nevis says, the less color you have on your skin, the stronger is the due diligence.
Yeah.
So, I mean, so it's
not
that.
What about the tax angle?
The taxation depends upon different countries. Like we touched upon it in the beginning. Like Dubai, there is no tax. In Nevis, you don't have any personal taxation. But the OECD is coming out very heavily on this particular issue. The EU is coming out saying that all the countries should be on a common platform, on a level playing field. In some countries, you don't have withholding tax. Some countries you have, like Dubai, you don't have inheritance tax, for example. So a lot of our people go and live there for 5 years, come back, so that the inheritance tax part of it is taken care of when they die. So same thing we talked about capital gains. Different countries offer this in a different to a different level. Some countries don't tax you on the dividends that you get, tax you to some extent on the dividends that you get. So these things differ from country to country. So depending upon what is your motive for opening an offshore account, you should go to that particular country.
Okay.
I mean, what I've tried is to give not definitely that something is white or something is black, that this is only for crooks or this is only for persons who have paid tactfully, but arrive at some sort of a common balance as such. Hopefully that would gel with the audience. Because there's nothing good or, like William Shakespeare said, there's nothing good or bad, but thinking makes it so. Yeah.
Yes, that's correct. Yeah. So none of these discussion end without referring to the Panama case, right, or Panama country. So what can you give us? Give us some perspective on that in very short. We run out of time already. So for the audience, what is the problem and why is it become so famous?
Panama Papers, I read that book at least once a year. The biggest data leakage ever. Most of us have 1 terabyte of disk for photographs and all that. This gentleman, the John Doe, supplied 2.1 terabytes and 1 million pages of the companies that have been formed over a period of time. People should see this movie called, short movie on Netflix called Laundromat, starring, of course, fairly big people, Nicolas Cage, Meryl Streep, and all, Antonio Banderas. Sorry. And they went on forming these companies without even verifying who the ultimate beneficial owners are. And they ended up forming about 285,000 companies, mostly in British Virgin Islands.
Wow.
The most successful company ever in the history of formation of companies offshore has been this Fonseca. So Mossack Fonseca. So the main reason why they succeeded so much was they had a lot of agents all over the world who would send them the referrals, who are supposed to have vetted the individuals who want to open the company in Panama or through Mossack Fonseca. So Panama Papers has been the biggest eye-opener for the world. But and probably it will be very difficult for any other person who leaks out, because other things like Paradise Papers, WikiLeaks, and all that look like child's play. 1/10, 1/20th of the amount of data that was given. They had to form an international investigative journalist, ICIJ, and form all over the world. Use software that you and I don't hear of. You have a hard disk, huge amount, to unravel the mysteries, catch out of from Nawaz Sharif onwards. They did find even our own Prime Minister's name there in the list. So I remember reading about 400 odd Indians were there in that Panama Papers. People have been, ultimately I'm told only about 6 were prosecuted, even in India, when it comes to this. The main difficulty that comes up with most of the investigative authorities is that this does not constitute proof that you can produce in a court of law as investigative evidence. I mean, that's the difficulty of the police and the investigative authorities. We can definitely have a separate session sometime when you want it on Panama Papers.
Yes. Yeah. Yes. We will. Let's do that. So, Mr. Kaza, we've run out of time, and it's early morning for you. We don't want to hold you back. You have many other things to do.
When I talk to you, the time runs by.
I just want to thank you. Yeah, it just flies, not runs, it flies. So, I haven't covered my questions, but what to do, that's the way things stand. If you have a very interesting subject and a subject matter experts to talk about. And very, very truly, you talk very well about it. So thank you for joining us, spending your 1 hour with us. And audience, please join me in thanking Mr. Kaza. Mr. Kaza, have a great day ahead of you.
Thanks for having
me. Tomorrow, ladies and gentlemen, we have one of the, thank you, sir, thank you. Tomorrow, we have one of the banking stalwart coming up in our show in the 89th session. So today was the 88th. Tomorrow is an 89th session of Business Banking Dialogue. Mr. Kishore Karat, former MD and CEO of IDBI and India Bank. Topic is growth imperatives for banks in the post-pandemic world. When the post-pandemic world will happen, we still do not know. But yes, it will happen someday. So what are the growth imperatives for those when it happens? We will find out from Mr. Kishore Karat. So look forward to meeting all of you again once there. It will be a very interesting discussion, just like we had today. This is KK signing off. Thank you. Goodbye, and have a nice day, whatever is left of it. Thank you. Bye-bye.
Thank you.